And if network adoption models are the key models, I've spent a long time looking at this because a lot of people still don't really understand it. And I thought, how can I model this in a way that makes sense to an idiot like me? Because Metcalfe's law is a complicated formula where we don't have the simple inputs that we can just put it into a model. So I went through all of the different things on chain and the various factors and found that I could best describe the price action of Bitcoin via looking at the total transaction volumes in dollar terms versus the number of active addresses. And that makes total sense. A network of two people transacting $1 billion a week is nice, but it's not a network. But the same $1 billion a week transacted by 1 billion people is incredibly valuable. So Bitcoin transacts more volumes than anything else, and it has a lot of active addresses. And what's amazing is the two charts, even though the numbers are wildly different, the two charts mirror each other perfectly. It tells you that price is actually a great indicator of network adoption. So it doesn't give you a lead, and I'm working on rate of change models and other things to give us some leads on this, but generally it tells you cryptos are generally well priced by the market. It's very efficient in what it does. That signal is the signal for risk assets, I believe. And I think we'll see growth end of tech, which has been utterly destroyed and is down 70% plus, and crypto, and probably gold actually, start to outperform along with bonds. And those should be the phoenix that rise from the ashes, and some of these other more cyclical plays will do less well. Those are the things that have been outperforming over the last 18 months. The big question is, what is it going forwards? Is this going to be a longer recession, in which case everything rallies and then comes back down again, the Fed have to do a lot more? Is that what brings the Fed balance sheet in? Is the markets roll over and the economy looks terrible? I'm not sure. My base case scenario is a V-shaped recovery from a absolute cliff edge. But it could be something more drawn out, in which case we've got a much nastier equity bear market to come. But we'll wait and see. So it's a pretty grim prognosis, but I think this is the opportunity I've been looking for. The weekly DMARC indicators give us between 2 and 4 weeks for this low to come in. So I actually think we're about to go into a golden age, which I know people don't want to believe, but nobody believed it back in the 1940s either, because he'd just come through 2 world wars and they thought, well, everything's screwed forever. And much like you didn't believe it in the 1970s because you've gone through this inflation driven by the demographics, but the net outcome for the next 40 years was the biggest boom of all time. So I'm much more constructive than the mainstream narrative, which is this is the worst thing. Now, I understand that running negative real rates means that purchasing power doesn't go up. Wages are not going up. So owning assets is the only way of doing it, and assets should outperform debt in a negative real rate environment. So it's doable. Yeah, look, we've all got the wallet of shame of a whole bunch of tokens that have gone down 80% or so. And those were, I did that on purpose. I chose an equally weighted basket plus a few other bets, and I knew that it was high risk. So, it's not something that concerns me. And within that would have been some of the layer ones, some metaverse, some social tokens, all that kind of stuff. And that was really to see the space, see what's getting adoption, just keep in it and keep learning and just see how that pans out. And then the bulk, 85% of it is all in ETH. And then there's a small amount in Bitcoin. Feels that ETH wants to underperform Bitcoin for a bit now as we hit the final liquidation phase. But that ETH bet was a very good bet versus Bitcoin. I think that continues because of network growth is faster. And I think what I'm looking to do is, I think the next phase will be, okay, I think ETH will do well the next cycle, but like Bitcoin did, not as well as it did the previous cycle, because that's how network adoption works. And there'll be one or two other layer ones that will do very well. My kind of hunches are Solana and maybe AVAX, don't know. AVAX a bit complicated for me, so I'm not really sure, but interesting. And then there's going to be trying to capture, okay, what is this next phase going forwards of NFTs and social tokens, and how do you even play that? Because doesn't really exist to invest in right now. We don't really know. We don't even know what chains half of this stuff is going to end up on. Where the POAPs exist in the end. My guess is Solana's going to get more than we think of this stuff. As more Solana wallets and integrations like Ledger, you can have these Solana and stuff like that in, it becomes something more interesting. But maybe it's not. Solana's got its own problems. It keeps seizing up. So we'll wait and see. I've got no strong view yet, but there'll always be something. And then there'll be the fat tail, which is the thing you didn't see, that goes up, 1,000x. And who knows what that is. That just takes time to uncover and an understanding of the space.